Good evening, everyone. I hope you can hear me loud and clear. First of all, thanks a lot for joining with us here today to learn about investing in government securities. So 7 years ago, when I started with CAL, one of the main questions that I had in my mind was if the government securities market, as we say, is very lucrative and the interest rates are comparatively better to fixed deposit at most instances by a lot of people investing in bills and bonds. I'm so glad, fast forward 7 years, we had a place here today where I could talk mostly to retail audiences about investing in government securities, especially through a fully automated platform, thanks to the growth in technology and the market. We can introduce you to the CAL portal, which is a fully automated platform for you all to invest in government securities. And also, if you all had previously joined us for our last webinar, and you all find these slides very similar to that, it's because it's exactly the same slides. So the most part of it that we will be covering here today is the basics of investing in government securities, which is pretty much similar to what we did during our last webinar. Also, on top of it, we'll be introducing you to our CAL portal platform, which is a fully automated platform to invest in government securities. And also, you will be the first to see all the additions or the beta version of this website that we will be showing you all with the new features. So without taking too much of your time, I'll take you all through the presentation. Okay, so there are three areas that we will be covering during this presentation. First one, what exactly is a government security? Second area will be why to invest in government securities over the other traditional forms of investment. And third, the most important question, how exactly to invest. So what exactly is a government securities? As you all know, the government of Sri Lanka throughout history, which hasn't changed, has been borrowing, has been spending more than what they are making. In other words, the income, the expenses of the government has been exceeding the income throughout a long period of time. So how do they fund this budget deficit? So to fund this budget deficit, the central bank acts as a banker to the government by issuing treasury bills and bonds. By issuing treasury bills and bonds, the central bank raises funding for the government. So this is where CAL together with the other banks and primary dealers comes into play. So we act as intermediaries, allowing central bank to raise money from the market by issuing bills and bonds. I would like to reiterate the fact that we act as intermediaries. We are not the principals. We act as intermediaries, allowing the central bank to raise bills and bonds to fund the government's budget deficit. So to take you through the basics, we'll be looking at two main forms of government securities. One is a treasury bill. The other one is a treasury bond. So treasury bill is pretty much straightforward. Treasury bill is very similar to a fixed deposit. So when you place a fixed deposit, when you walk into a bank, what you initially communicate is the amount that you want to invest, which is the investment amount. And the bank agrees on a rate, and upon the maturity, which can be 6 months, 3 months or 1 year, you get the maturity amount to your hand. In this example, so you're investing 1 million at an interest rate of 20%, and upon maturity, the bank will pay you 1.2 million, which is the conventional fixed deposit. But when it comes to treasury bill, it is still exactly the same, but we use a different terminology. So how it works is when you're buying treasury bills, we speak in terms of face value. So face value is the exact same as the maturity amount. So when you're buying treasury bills, you need to decide what exactly is the maturity amount that you want to receive. To receive that maturity amount at the given interest rate, we will tell you how much you need to invest. So it's very similar to a fixed deposit, only difference being the terminology that we use. So next is the treasury bond. So treasury bond is slightly different to a treasury bill. Generally, treasury bond maturities are longer than 1 year, and treasury bill maturities range between overnight to up to 1 year. When it comes to treasury bonds, the main difference being there are regular cash flows. So if you can see that graph on top, what it shows is if you want to receive a maturity value of 1.2 million at 5 years, after 5 years, a treasury bond will pay you regular coupon. So in this example, I've used a coupon rate of 10%. So let's say in 5 years, you are going to receive 1.2 million to your hand. And every year, the central bank will pay you a 10% coupon, which is 120,000, 10% of 1.2 million. So every year you will be receiving this 120,000, and at maturity, you will be receiving 1.2 million to your hand. So the question is, how much exactly do you have to pay today to buy this investment, which is determined by the interest rate? So if you're familiar with the time value of money, we discount the future cash flows. In simple terms, we need to decide the 120,000 you receive in 1 year's time, how much is it worth today? So what's the current value? So for that, we use the bond calculator to discount the future cash flows to the present value. So long story short, in simple terms, there is a certain investment amount or your investment that you need to pay today to receive this annual coupons every year. And upon maturity, you will receive the principal value. So the difference between bills and bonds, one is the coupon payment that you receive on bonds, and also the tenor, because bonds are generally longer than 1 year in terms of maturity. So what is the main risk when investing in government securities? There are different types of risk, but the important risk that you need to consider is the interest rate risk. So how the interest rate risk works is, so let's say you are buying a bond or a bill by paying, for example, 100 rupees today. And the interest rate on that investment today is 20%. You are buying a 1 year bill. So if you hold this bill till maturity, which is 1 year, you will get the full value or the maturity value to your hand. But let's say in 6 months time, for whatever reason, you want to exit this investment, or you want to sell your T-bill or bond. So the amount of money you get to your hand at that point depends on the market interest rate on that day. So the value of your investment and the market interest rate moves in opposite directions. So for example, if you are putting 100 bucks at 20 rupees and in 6 months you want to sell and the market interest rate is at 25%, the value of your investment might have dropped from 100 to 80. At the same time, if the market interest rates have actually come down at that point from 20%, let's say it has dropped to 15%, on top of your investment of 100, you might be able to make a profit of another 20 in this example. So in simple words, the value of your investment and your interest, the market interest rate moves in opposite direction. If the interest rates move up compared to the point you bought, you might have to take a loss. And if the interest rates come down, you might be able to make a profit. That is if you're exiting your investment midway. But if there is a guaranteed interest rate on your bill or the bond and you're holding it till maturity, if you buy a 1 year T-bill and you hold it for 1 year, or you buy a 5-year T-bond and hold it for 5 years, then there is no interest rate risk. You still get that promised interest over that period of time. So why exactly do you have to invest in government securities compared to the other investments? So one of the main questions that is being asked these days is about inflation. So right now, inflation is over 50%. So what is the point of saving money when the value of the money is falling by 50% and you're making a return of only 25 or 30%? So the argument being, interest rate under the current context is at 50%, but we don't expect the interest rate to remain at 50%, let's say for the next 5 years. But if you can buy a 5-year bond around 30%, and the average interest rate over the next 5 years comes down to about 10 or 15%, still your real return is positive. So that's why we recommend locking in long-term bonds, especially under the current situation, because over a period of time, if the inflation does come down, the real return on your investment will turn out to be positive. And why exactly do you have to invest in GSEC over the other traditional investment? One of the main reasons we go for any form of investment is returns. So if you're bargaining for the fixed deposit rates with banks currently it's ranging between 20 to 25%. But in terms of treasury bills and bonds, the rates are pretty much close to 30%. Right now, we are offering 12-year T-bills at 27%, 12 months T-bills at 27%, 6-month T-bills at 28%, and 3 months at 29%, which is still much higher than what is being offered for the bank FDs. And also, when it comes to liquidity, you can exit your investment anytime that you want, but still it carries a risk, because if the interest rates have gone up, there is a chance you might make a loss. But if you're going to hold your investment till maturity, there is no risk of capital loss. At the same time, where there is a risk, there is also a possibility of reward. So if the interest rates have come down significantly from the point that you have bought, you will be able to sell your investments, which are treasury bills or bonds, at a profit. And also, there's a possibility of leveraging your investment. Leveraging is using your treasury bills or bonds as collaterals to obtain funding against it. It depends on the liquidity situation of the institution at the same time, but the generally accepted principle is that if you have a treasury bill or a bond, against the treasury bill or a bond, you can obtain a loan, which is also known as a reverse repo facility. Which brings us to the final part, how exactly to invest in government securities, or how does this process work? So we recommend you, if you are investing in government securities, to go through the CAL portal, especially if it is retail investments. Where do you start? You start with signing up under the CAL portal. So go to the CAL website. There's a place where you can sign up for the CAL portal. So the sign up part is pretty much straightforward. It's like signing up for an email account. You give your basic details with your bank account details and NIC details, and you can sign up for your CAL portal account within a day or two. And next up, I will show you how to purchase these securities through the CAL portal. Okay, this is a sample account. Okay, so once you set up your account through the CAL portal, this is how it will look like. So you go to Treasuries, and there is an option here for you to invest in government securities. So you click on these options. So few of these options that you see here are still on beta mode. So it hasn't gone live yet. But the whole point of introducing CAL portal is that you have flexibility between different parts of the business of Capital Land. So if you're already an existing unit trust client and you invest in unit trust, that is mutual funds, this portal gives you the flexibility to directly transfer your money from one investment firm to another. But to keep it simple, if you're directly settling through a bank transfer or a bank deposit, you click on this option, select the form of investment that you want. And one of the other one of the main highlights of investing in government securities is that there are treasury bills that you can invest, which matures in 2 to 7 days. There are treasury bills that you pick, which might mature in like 3 months, 6 months. So you can select the preferred time period of your investment. So for this example, I'll select this treasury bill. So you select the treasury bill that you want, and you type in your investment amount. And the portal will calculate the face value for you. So face value, like I mentioned before, is the maturity amount that you will get to your hand. You click confirm, and this message will display on the screen with the bank account details. And how portal becomes very convenient for you to invest in government securities. is where you can do an online bank transfer to settle. So there is no paperwork involved. There is no visiting. You don't have to visit our office space. So you can completely do this process online. The bank account details are provided. You click next. Select your bank account from here. And then you do the transfer. Click on upload. Click upload your transfer receipt and confirm this date. So on top of that, we have also the reinvestment option. So the reinvestment option is where, for example, if you have placed money with a bank, when it comes to the maturity date, generally the bank rolls over these investments at whatever rate that they have provided at that point, right? But when it comes to government securities investment, what we usually do is upon maturity, the investment gets transferred back to the bank account that you have provided on your application. But here on CAL portal, we have given you the option where before the maturity, a week before the maturity, you have the option of reinvesting you have the option of reinvesting the maturity at your preferred rate and tenor. So you can go to this reinvest option, which will give you the option for you to reinvest your capital only or capital plus interest. You can decide the way you want to invest this, and you can pick the investment as well. You can straight away transfer the money to the UT if you require, or you can invest in another treasury bill or a bond. And I would also like to highlight the fact few of these features that I'm showing today are still under beta mode. So hopefully in a couple of weeks, we'll be launching these options. But most importantly, the CAL portal has given you the flexibility to invest into government securities completely remote. It's a complete remote investment. So you don't have to do any paperwork, or you don't have to even visit office premises to complete any documentation. It's a completely automated and online process. Okay, so that's about it. In terms of the presentation, I was graciously given 30 minutes to explain all about bills and bonds, which took about a couple of years for me to learn. So I hope I explained it well enough for you all to have the basic understanding of investing in government securities. And now we can open for Q&A. If you all have any questions regarding what I just explained, please type in your questions on the chat box. Okay, I see a question. Did the government coupon rates change recently? So the coupon rates of these bonds depends on the coupon rate depends on what rate the market is trading at the time of issue. For example, there are 5-year bonds with 10% coupon, and there are 5-year bonds with even 20% coupon. So the coupon rate depends at the time where they issue the bonds. Usually they try to keep the coupon rates in par with the market yield. And the most important question, there's a question about debt restructuring. So currently, I don't think any banks, PDs, or any other financial institution has a complete clarity in terms of debt restructuring, whether it's going to happen or not. What is the maximum amount we can invest in a treasury bill? So there is no maximum amount when it comes to treasury bills, but there is a minimum amount. So if you're buying through an auction process is where the central bank directly issues these bills and bonds on a competitive bidding basis. So when you're going, if you're going in for the auction process, the minimum investment is 5 million. But if you are buying directly through the CAL portal, we have reduce the minimum investment to 1 million. I see another question. How long will it take to open the account? generally, if you're opening an account through CAL portal and all the documentation is in order in terms of what you have uploaded on the portal, it takes about 2 to 3 days max for you to open the account. If we are buying a new bond through CAL, can we still do it through the portal? Yes, the bill for both bills and bonds, you can still buy through the CAL portal. Could you please explain the role of primary dealers? So like I mentioned before, primary dealers act as intermediaries. So the government has a budget deficit, and to settle this budget deficit, the government needs to raise money. So the government can't directly raise money. So the central bank acts as the banker to the government to raise this money for the government by issuing bills and bonds. And central bank cannot go to each and every individual investor to raise these funds. So what they do is they have a primary dealing system where there are banks and PDs who get involved in this competitive auction process. So on behalf of the investors, we actually collect all the investors' bids and place it at the primary auctions. So that is where the primary dealers come into play. Primary dealers act as intermediaries, facilitating the investors to invest in government securities. How long does it take to confirm the deposited payment? So on the CAL portal, if you're buying treasury bills or bond, when you attach your transfer slip and confirm your transaction, right away you get a confirmation email. So the confirmation email confirms that you have invested in this government security and that we have received your request. But by the end of next day, you will receive an official contract note, because even though you have done the transfer on the same day, it takes a certain time for us to verify with the banks whether the money you have transferred has hit our accounts. So on the next day, you will receive an official contract note from CAL. What are CAL's fees? So buying from the CAL portal, we've waived off any charges. So if you're buying through the CAL portal, treasury bills or bonds, we are not charging anything from the clients. There are no fees involved. Okay, to transfer, so there's a question whether it's possible to transfer from UT to treasury bills. It is possible at the moment on the portal. That function is being tested. Hopefully in a couple of weeks we'll launch that function. But currently, if you do have a requirement like that, you can always drop us an email, and internally we can transfer your funds from UT into treasury bill investments. Okay, so when it comes to primary dealing, or when we act as primary dealers, we are not relationship managers, or neither are we investment advisors. So we are just the intermediary facilitating you to buy bills and bonds. But if there are any questions or you need suggestions with regarding to account opening or investment, you can always contact us directly through our hotline. And also you can, the easiest way would be for you to drop an email to dealing@CAL.LK. We will show all the details after the presentation. Just drop us an email. We are ready to help you anytime. That's it. Okay, I think that's about it. Thank you, guys. Thanks a lot for taking your time to join with us today. I know it's not a lot of time for us to explain everything in detail. So if you have any further questions, feel free to contact us through our hotline, or else drop us an email to dealing@CAL.LK. We will share the details later on with everyone who joined. Drop us if you have any other queries. And even with account opening, if you all are facing any difficulties, drop us an email or call us anytime. We are happy to help. Thanks again for joining with us today. Thank you, guys.